Good evening. Bad cop here in the building, but bad cop is in a good mood today. Markets are eventually giving us what we've been waiting for since the beginning of January. And those that were around, I hope that you have taken full advantage of it. So I must say, it has put me in a good mood today. But as I said, bad cop's still in the building. I'm still chasing you guys, and I'm still watching what you're doing. This morning, 7 o'clock, we put out a few pairs on our watch list. Namely, there were the New Zealand dollar, US dollar Swiss franc, euro chief, pound yen, pound US dollar Canadian dollar, euro New Zealand dollar, and Australian dollar, New Zealand dollar. Shortly after that, around about 8 o'clock, 8:30, pound CAD and euro CAD popped into the picture. So that left us with 10 pairs to have a look at to trade throughout the course of today. I'm going to run through 3 of the pairs with you before I hand you over to Chris, so we can have a look at them, so you can see the setups that presented themselves. I'd be interested to know which one of you, or if any of you, took advantage of these moves today, and if so, on what pairs. So we'll get started having a look at the pound yen. Obviously, this was one of the ones I did my video analysis on this morning. It was certainly looking like an exceptional pair to trade. Just bear with me 1 second. I can hear somebody posting stuff up in the forum, and I just need to cut that quickly. Okay, so having a look at the pound yen on a monthly time frame here. What we noticed this morning was that price this month was trading higher. It had attempted to trade very much lower during the course of this month so far, but the bulls are back in control again and trading back above that long-term support level. Even though we're below the 2 moving averages, they're still quite a distance away from price, and therefore any pullback would still be quite substantial in this case. Our fast and trigger lines still remain below. Our histogram is non-existent because of the consolidation that we're getting throughout this month, and RSI still was below 50. But our indicators are backing up the sentiment of that medium and long-term trend direction still remaining to the downside. But as we drop down onto the weekly, now we're starting to see further movement to the upside. For 3 consecutive weeks, price is trading higher. And we can see that we've got the 50-day moving average, which could be our next point of resistance as price pulls back. Our histogram still remains below, fast and trigger lines are still below, and RSI is still below. So again, it's just pointing out the fact that medium and long-term traders still remain in longer-term downward moves. But I'm not trading off a weekly time frame, and looking at the weekly candle in itself, it is extremely bullish. The previous week's candle was extremely bullish as well, so I knew straight away I should be looking for buying positions. Now, yesterday, we had that confirmation close higher than the 50-day moving average. That was the first thing that we were looking for, that confirmation of that close higher. So now all of a sudden, the medium-term traders are now in buying positions. Now, we are intraday to medium-term traders, so we're going in the direction of that move. Look at our histograms. They were big. They're still big. Our FOS line is above the midline, and RSI is above 50. So straight away, from yesterday's candle close, daily traders should have been looking at buying positions from first thing this morning. And look at what has happened to price. This is what makes me excited. Okay, we're seeing a nice, huge, bullish candle, a huge trading opportunity, even for daily traders today. If we drop down onto the 4-hourly time frame, having a look here, price bounced off the 200-day moving average. It came back twice, and it found that support, and we had a nice breakout candle to the upside. Even if you were looking at the fact that you were looking for a 4-hourly close above that previous swing, you still got that breakout candle close higher here. I'll just zoom in slightly so we can see. There's our breakout candle. Our histogram is above the midline. Our FOS and trigger lines are above the midline, and we had that crossover. Okay, the FOS line crossed through the trigger line, indicating continuation of trend to the upside. And RSI is above 50. So there, the strategy in itself is set up. Breakout, indecisive candle, confirmation. Having a look at that entry to target on that pair, from where price started to the highs there was 145 pips. Now we're talking about intraday trading, even just day trading. 20, 30, 40, 50, 60 pips is great. I managed to get, I think it was 120 pips from this pair today. And if you drop down onto the hourly, look at that beautiful, beautiful movement. Okay, we had the breakouts this morning. If I just move that up slightly, we had a nice breakout, and the strategy in itself was set up. Histogram was above, Fast and trigger lines above, RSI above, and what happened to price? It shot off. Okay, brilliant trading opportunity today. Those of you that were in the VIP forum should have jumped in at that opportunity as well when we posted it up there. Yes, we've had a few candles pulling back, but look at what price has already made today. We've got to expect some type of pullback at some stage. But we had an engulfing hourly candle here, and price continues to move to the upside. We are seeing a bit of a slowdown in momentum. That's because the indicators lagging of price, and price had done that pullback. But we still are going to be looking for continuations up to those next highs. So if you're looking at a new entry on this, put in a resistance at that swing high and look for an hourly breakout candle tonight for continuations to the upside on this pair. Absolutely loved this. This really made my day today, this one. The next one that popped up was the pound Canadian dollar. I got into this a little bit later after we had come back from lunch, I think it was, and just in the right time as well. Looking here at the monthly, we can see price has found a support level, and for the past few months it has been attempting to trade higher. Look at the current monthly candle. It's attempted to trade very much lower during the course of the month and now trading higher. We've got our 50-day moving average, which is above price, and that's where we could find our next resistance level. Our indicators are not backing up in terms of our MACD. I think our MACD might have just crossed back above the midline here. And we've had a crossover of our Fast and trigger lines, so that's also indicating a potential continuation to the upside. And RSI is now popped its head above 50, so that's all looking great. Dropping down onto the weekly, here we've seen that we've got the 50-day moving average, and price has shot straight through that. A huge bullish candle here on the weekly. Our histogram is above the midline. We had a crossover of our Fast and trigger lines all the way back here, but our FOS line has now crossed above the midline, and our RSI is above 50. Again, all looking positive, and the next point of call could be the 200-day moving average on the weekly. If we drop down here into the daily, look what we had yesterday. A nice big bullish breakout candle above the resistance level. Price is above the two moving averages. Our histogram and Fast and trigger lines are above the midline, and they're getting stronger. RSI is above 50. The strategy was set up from this morning for potential entries, even if you went up to your first target of that previous swing. Having a look at the entry to target on that pair is still 100 pips. Good trading opportunity. Now today's candle is trading higher than that previous swing, and we could be looking for continuations on this pair, even higher now, up to those next resistance levels. If we look at this intraday, having a look here, we had that breakout, pullback, continuation. Even if you traded this off this breakout candle over here, up to that level over there was still 55 pips. Still an intraday trade, price well above the two moving averages. Histogram looking strong. Fast and trigger lines above the midline. RSI above 50. All looking great. So on the 4-hourly here, we've got a breakout, potential pullback, and what we're going to be doing is looking for continuations to the upside. Dropping down onto the hourly time frame here. Here we can see price above our moving averages. We had the moving average crossover, histogram getting bigger, RSI above 50, and therefore we had our entries into this pair. Yes, we're getting that pullback, but find a support level and look for continuations again. Another great trading opportunity. EuroCAD, I just took 25 pips from this evening, well, early afternoon, should I say. Having a look at this particular pair, the current monthly candle is, yes, trading lower, but we still remain above the two moving averages. So, medium and long-term trend direction to the upside. Our Fast and trigger lines still remain above the midline, indicating overall trend to the upside. RSI is still above 50, again, upside movement. If we drop down onto the weekly, Here we've got the 50-day moving average, which is above price, but we've still got price above the 200-day moving average. So our long-term trend direction still remains to the upside. So dropping down onto the daily, if I just zoom in here so we can get a clearer picture. Yesterday's candle, a bullish candle, 3 days of consecutive bull markets, a close above a 200-day moving average, a piece of concrete. Price had enough momentum to be able to break through that and close. Yes, we've had a bit of a pullback during the course of the day, and that's why I only entered into this pair late this afternoon. Price had pulled back. The bulls came back into control again. So looking at this in terms of a daily, we've got the 50-day moving average, which could act as the next major target going forwards. It hasn't been a daily setup as such because we have not had confirmation of the histogram above the midline. But what we are seeing is a slowdown in negative momentum and a potential crossover of the FOST and trigger lines. So if we drop down here onto the 4-hourly, there we had a nice bullish 4-hourly candle close higher. Our histogram and FOST and trigger lines are above the midline. RSI is above 50. So the strategy there in itself sets itself up. This was trade that I took was taken off the hourly. Here you can see that price just closed above. That's the breakout candle I was looking for. Price rallied straight through that 200-day moving average. Look at the momentum that it had, that it was able to break through that concrete and close higher. Our histogram above the midline, a FOST and trigger line a crossover, both FOST and trigger lines above the midline. RSI above 50. Entry. Fine. Looking at where price closed above to the highs, it moved 46 pips. Only took 25 of that because Connor came back from school, was happy with that. So all in all, just made under 250 pips a day off trading 3 pairs that were on the watch list. Some of them had videos done and the rest were posted in screenshots in the VIP forum for everybody to follow. So that's my excitement from today. And I'm going to hand you over to Chris. I'm going to have a look at any of the pairs that you posted up, any of the other ones that we had on our watch list. But today has been a great day. Hopefully tomorrow we'll see some continuations and hopefully that you guys will be able to act and react and make some money off those moves as well. So I'll hand you over to Chris and I will be in the chat for any questions that you guys might have.
Good evening, everybody. Nikki's sitting opposite me. Very big smile on her face. Okay, some of you guys are saying there's an echo, and Henry says, is Nikki talking? Or is it just me? I can hear Chris, but you can't hear Nix, and I could hear Nix, so interesting. But we'll check once again when Nikki comes back on again later on during the course of our interaction. Let's see if we can get that, if it is working by then. Okay, so yeah, pound crosses have moved. I did mention earlier that if the pound's moving, so euro showing weakness, so there would have been a trade on euro pound. Okay, let me see. Nikki's saying she can't. Bear with me for a moment. Let me just see if I can just bring up, not the whiteboard, you know.
We couldn't make it 1 month without any technical difficulties, could we? That's if you can actually hear me talking to you guys.
I can hear you on my one quite clearly. Right, so there, should be coming up. There we go, you can see it. Perfect. Yeah, awesome. So as Nikki mentioned, some pound crosses have been moving with excitement, and that's purely down to the clear fact, and I think I mentioned on the chat earlier, that traders out there seem to think that what we could be steering towards is this soft outcome, Brexit outcome, okay, which is better than no deal. Okay, people are pushing for a no deal, but you get the kind of feeling that we're being pushed closer and closer, and we probably find that Theresa May is going to get some sort of idea from the European Union in terms of maybe they might be a bit more flexible, or we could actually see some MPs starting to say, hang on a moment, yeah, let's just disagree on a couple of things and keep it at that. So in terms of the mindset of the individual trader out there, that's a good one. it depends how good it remains. Okay, a lot can still happen. At the moment, we've seen the mindset of traders currently at the moment now taking opportunities because the longer we see the failure, but they're still wanting to stick trees in May, etc. All this is going to start to think, well, hang on a moment, this could actually start to steer us towards this soft, flexible Brexit plan-ish. And for a lot of people, that's better than nothing. And we're seeing pound rising currently. Will it continue? That remains to be seen. But there again, if you're trading this, understand that there's still a lot of uncertainties with it. So as Nikki's treated a lot of her trades in, move with the move your stops up, and if it pulls back against you, you've capitalized. Happy days, keep smiling, and then repeat again tomorrow. Rinse and repeat, because that's going to be the thought process for a lot of traders out there. Not willing to leave all their capital out on the table, so you're going to see a lot of movements, but then sharp retracements, and that's what effectively what the pound against the US dollar, a lot of them have been showing. If I just show you that, just by looking at the monthly time frame, you can see that playing out over most of, especially from the mid part of last year down to where we currently are. It's just got a lot more stickier towards the hard right edge, but you can see that that clear momentum coming through on these pairs. If I bring up the Forex Mid Easy template, yeah, you can see a lot of bullishness coming in compared to the December close. So if you're looking for opportunities, we need to see price trading higher than December close to then obviously put more weight on the bullish side of things, and we could then look to use the November high as a viable target level for that foreseeable future. If we drop down to the weekly, that November high is pretty much where the 50-period moving average is. So we're clearly trading above last week's high. Okay, we saw a lot of momentum to the upside, plus a lot of momentum to the downside. Price pretty much close, ever so slightly higher than the previous week, but nonetheless, we're still getting that momentum. And yeah, as things stand at the moment now, we're starting to get an emphasis that investors and traders out there are quite happy because as the way current things are stacking up, it's starting to take a more of a softer tone in terms of any outlook coming up, which is far favorable than getting nothing really. So there again, looking good. There again, a lot can change. Okay, so if you're trading, ensure, like Nikki mentioned, it's in and out. Don't leave a lot on the table. If you can, if price is moving quite aggressively, look to bank that profit as soon as possible. Okay, remember, consistent trading makes for a great trader. Okay, so there again, if you're consistently taking 20-30 pips, as Nikki mentioned earlier, even better. You know, a lot of these pound crosses have actually given us in excess of 100-150 pips today just on the movement so far. So if it's there to be taken, then by all means, you know, ensure that you are taking some of that. Okay, so I did mention that if the pound is doing really well, then that's going to have a serious knock-on effect on the euro, because that's the one beauty about the euro against the pound cross. So if you look at it right now on the monthly time frame, you can clearly see that if I draw a line in the sand above the current highs for all of 2018, you'll see that price has failed to get above the highs we saw back in September and October of last year. And then November, straight into the level again, but you can see a huge sell-off that we're witnessing. And that's clearly purely down to what's happening at the moment now with Brexit, uncertainty within the European Union itself in terms of a contraction. A lot of its larger economies, that's including the German and the French economies in particular. But we'll still notice that price is now sold off into this consolidation band low that we've seen for almost a year and a half now. So we just got to keep an eye on that, because if there's a further opportunity for further continued selling, if this month's candle can close lower than this whole consolidation point of year, then there's going to be a lot of further opportunities, especially down to the low we saw towards the latter part of 2016 and the start of 2017, which would bring us back towards that level where the 50-period moving averages. And we're looking in excess there of 300 pips, okay? So another one to keep an eye on. The RSI is now literally moving in towards that midpoint level. The MACD has clearly been in the negative for quite some time. It's just that we haven't seen any real driving mechanism to the downside. The only downside over here is both moving averages are still propping up price on the larger time frames. We drop down to the weekly, you can see that sell-off. Okay, there were signs, clearly signs there to be seen early on in the latter part of the of last month, but the start of this month in particular, there's a lot of negativity at the current high. So we're seeing a lot of wicks, which emphasizes that there's exhaustion in the buying side of things. So we're starting to see more of a negative aspect. And as we've headed further into this to this month, purely because how things have fallen on the table in terms of how things have pretty much come unstuck in the House of Commons. It's lent more bias to the downside for the euro and more strength for the pound currently. Will it continue to occur? That's the uncertainty. Okay, that's the risk, because it can change within a heartbeat. Somebody could say something tomorrow, but as it stands at the moment now, just keep on the side of the market sentiment at the moment now. On this time frame, you can see that we have 50 above price, but the 200 is still below price, but that ultimately will be our target. The RSI is below the midpoint and getting a lot of strength. You see it's very aggressive over here. MACD, fast line, is now below the midpoint, and the histograms is clearly below the midpoint. We've still got 3 days and 4 hours still to go before we actually can see that as a visual vertical line appear, as we've seen on the MACD crossover each time before. So there again, passive or take a more passive approach or more aggressive, that's entirely your choice. But as it stands right now, just looking at the bigger picture, we are trading into a very strong support mechanism that's been in place for almost a year and a half. So keep that on board. Sorry, you want to add something to that?
No. Just certainly not one of my favorite pairs. I don't even have it on my charts, but I know that some of you guys do trade it, so I'm having a little chuckle to myself.
Yeah, it's a more of a knee-jerk reactional trade. So if the pound's doing well for whatever reason, like it has done today, you bet your bottom dollar the euro is going to take a bit of a kicking because of that, and vice versa. Something could happen tomorrow and it could be in favor of euro bulls, and the euro would obviously then take a fall because of it. So that's the only reason why I mentioned it earlier on the chat. If the pound's doing so well, then surely the euro will probably be doing weak, because that's how it works. It's the same for the Australian New Zealand dollar cross. If the New Zealand comes up with some favorable news, the Australian market contracts. Vice versa, if the Australian market comes up with some favorable news, then the New Zealand dollar would contract. And it's just a knee-jerk, I call it a knee-jerk reactional trading opportunity. Okay, so I don't know if we've got any pairs to go through.
Yeah, the first one that we're going to have a look at, it's been spoken about quite a bit for the past week or so, is the US dollar Swiss franc from Enza. We did have some good opportunities on that pair, and I think that Chris and I will be able to point out a couple of things that could potentially be stopping price moving further to the upside on this one. So let's have a look at this one. So US dollar Swiss franc.
Okay, so the noticeable one over here is we've seen a rinse and repeat cycle. Humans, just by nature, will do something and then repeat it, and do something and repeat it. And clearly the same biases on this particular pair. We've seen that price has been unable to really move away from the 50-period moving average over the years that she has been able to get above it. And I'm not talking about a couple of months, I'm not talking about a couple of years, I'm talking about many years. We saw the price using this level over here through 2007, 2008, 2009 as a support mechanism below the 50-period moving average. We mentioned this a number of times. Use the moving averages as a guiding hand. Okay, the beauty about moving averages, they are trend bias, and if we're looking for trends, strong trends, whether they be strong negative or positive trends, ensure that those moving averages are helping you in terms of guiding price lower or guiding price higher. So if you can see through start to the millennium right through to around about the 2014, the 50-period moving average was doing a fantastic job of resisting price. But then the latter part of 2014, she jumped above it for the first time, and she rallied into a viable target level, which would have been the prior low that we saw here in 2007, 2008, 2009. However, when we got a break above it, we were looking for that pullback, which happens 90% of the time, which we did eventually get, but then we were looking for that continuation. So break with momentum, people go, hang on, we've broken the major support and resistance level. They take profit really aggressively, which is their first and foremost, their first thing to do is to bank on that movement, and then you're looking for that flood of liquidity to come into the market, because systematically we've broken through major support and resistance, so you would expect that flood of liquidity to drive it higher. But for whatever reason, and probably down to the fundamentals, it just came unstuck. And it's done so a number of occasions since then. But nonetheless, over time, this level has been a sticking point for the dollar. So if we look at rinse and repeat, you'll see that throughout 2017, price failed to make a new high. So this year, or last year, apologies, we saw price heading into the 2017 highs and failing. See, we started to see a lot of exhaustion on the buying side because we saw a lot of price moving high, but then retracing very aggressively at these levels. So we know there was a lot of profit taking place, which essentially kept price below that physical level. Then towards the latter part of 2018, we saw the dollar re-emphasizing that re-emergence for dollar strength. However, on the the October close, one was really expecting price to then reach out and try and touch the highs for 2015, 2016. That never materialized because then we had a bear candle, which emphasized a bearish army, and sure enough, the December candle gave us that selling. But it's sold down to a level where one would expect people to look at it as a TP level or trade profit level because it's happened so many times on the failure to go high. Fall, where to? Well, let's go to the 50. Why the 50? Because we've been there every single time we've had a fall from the high. Sure enough, down to the December candle, into that level. So now we're thinking, well, great. Once we go to the 50, what have investors or traders done when they got to the 50? They've always bought, because every single time prices got to the 50, lo and behold, she's bounced, corrected, high on numerous occasions. So this month we should have been looking for exactly that to take place on the 50-period moving average. The RSI is showing signs that price has been skipping along the 50. It hasn't broke below. Yes, one could say, well, Chris, yeah, to a degree over there, but most of the time it's been spending above the midpoint, and price has been spending most of the time above the 50-period moving average. MACD is slow. Okay, we haven't got a genuine trend here. So the MACD is kind of flat, but the fast line is still above the slow line, above the midpoint, which is positive, and the MACD is still above the midpoint. But it's been contractioning as we've headed further. But there again, price has been falling. Now, here on the hard right edge, we should have been looking for signs, and I mentioned throughout January, look for hammers, candlestick formations on your weekly to emphasize a strong support, because each time price has been trading into the 50 on the monthly time frame, when we drop down to that weekly time frame, you will see the candlesticks have been inhibiting signs of buying coming through. So there again, good detective work. Look for those signs. Sure enough, indecision, followed by a nice bull candle. So now we have a very strong morning star. So now we should be looking for higher highs. Okay, so this is the point now where we draw a line in the sand over the high of last week's candle and say, great, give me more momentum above that level. Monday, Tuesday, Wednesday, Thursday, Friday of this week or any week preceding has to be maintaining above that level to then indicate that we have continuation of the bullish sentiment that we've seen over the past week or so. Both moving averages below supporting price. Where the 50 was on the monthly, now we have the 50 and 200 doing exactly the same thing. RSI above the midpoint. MACD is taking a bit of time to come around to verify what we're seeing on the chart. But there again, we've seen a very aggressive sell-off and a really aggressive pullback. So the MACD being lagging, it's going to find it very difficult to kind of mimic that on the chart. So nonetheless, we have signs out where the selling sentiment has obviously dwindled. Okay, but we can see strength in the candlestick formation. So here I'm going, well, if this is clearly a strong reversal morning star picture, great, draw a line. You stay above that all week, then you have my attention. If you don't get above that level, i.e. the high of last week's candle, then I'm not interested. Okay, so that's what we're looking for on the daily. So there again, draw a line on the sand. Now what you can see is the Thursday, Friday, and Sunday candle failed to make a new high. Then we had a Monday punch high. The RSI is up. Both moving average below price. RSI is up, as I mentioned to you. MACD fast on above the slowdown. Okay. Then we got this indecision candle. Okay. Now you can see that the dollar is decreased today against the Swiss franc. It's pulled back. Okay. So we're starting to see uncertainty creeping now. Okay. And I think this is where Nix is going to pick up and run with it.
Yeah, I think that we spoke a little bit about this in the forum this morning, and I said that the main thing that was putting me off this particular pair was the fact that we're trading into a daily resistance. So if you can just move that your yellow line where price is now slightly higher to yes. So can you see further back? It's acted as a resistance level close to the 50-day moving average there. It used the 50-day moving average as a resistance, and that's where price was trading into. Okay, so if you hadn't taken the move already from the break above that 50-day moving average on the intraday or even daily, okay, that move is now finished. We're needing to see a close higher than that previous resistance level, which is it's now forming a resistance level here on the daily time frame. So for this reason alone, this was not one that really caught my attention that much, because of the fact of that resistance in play at this stage. So, you know, that's the US dollar Swiss franc. I think we'll move on from there. Helen is looking at the New Zealand dollar, US dollar. And I think this is one of the ones I did a video on this morning as well.
Okay, so New Zealand US dollar, we've spoken about it a couple of times now. Yeah, correcting off a long-term support level that we saw back in 2015. We saw selling throughout 2018 into this level. We've got a nice bullish engulfing candle as we headed into November. And then December, you can see that we saw initial buying. However, noticing that there was a 50-period moving average in close proximity, you could see that the buying sentiment actually dwindled quite quickly, and then we started to see the pullback taking place, which took us back towards at least the midpoint of the November candle, previous candle. Okay, so now what we have is we have a negative candle for December. So if we're looking at that as a clear sign where we should see potentially further retracements to the downside, i.e. back towards the lows we saw in the October-November candle, then we should be looking for continued selling to the downside in that case. You look at both moving averages still above price, which is resisting. The RSI is still below the midpoint. Okay, flat, but it's still below. It has increased, but there again, reflecting what we're seeing on the chart, which is important because that's what the RSI mimics, is relative strength of price action on the chart. MACD, fast line's below the slow line, histograms below the midpoint, which are both negative signs. However, you can see that the histograms have got weaker. There again, we can see that because price is obviously going in the opposite direction. Okay, so here again, you could draw a line at the 50-period moving average, which would be the high of the previous month's candle, which is the December candle, and draw a line across the bottom of the December candle and say, great, if we pull back, give me signs of either support you, and then we'll see a new reattempt to the high, or close and remain below the December close to then look for further selling down towards the levels we've just come from the end of last year. Drop down to the weekly. Now you can see that both moving averages, 50 and 200, are still above price resisting here. Okay, you'll see that price last week closed bearish engulfing compared to the previous week, which was a bullish engulfing candle. So we have 1, 2, 3, 4, 5 consecutive weeks now where prices failed to make a new low. Okay, so there's clearly a support mechanism in play. We had a nice juicy hammer 3 weeks ago, another sign of support, bullish support. RSI is around the midpoint on the positive side of it, but it's still treading water. MACD, fast line above the slow line, histograms above the midpoint. However, you can see those lines are starting to encroach with each other. The histogram is clearly dwindled in terms of momentum, but there again, we can clearly see that price is obviously pulled back. Here again, not made a new low. So if we are to see any continued selling because of what happened in December, we're still not trading lower to emphasize it this month. Okay, so there again, need to remain patient because we're 3 weeks into this month and we haven't made a new low. Therefore, if price continues to hold the line, there's more likely chance that price could then revert to the upside and reattempt the 50-period moving average, which is the high that we saw over the last 2 weeks prior. Okay, back to that 50. So just double click on that. So yeah, just take it to that high. Down to the daily. Now you'll notice on the daily we have price trading between the moving averages. Not great, because ideally you want to see price trading above both moving averages or below both moving averages to emphasize the trend strength. Okay, either supporting role or resisting role. Here, price is capped by both. Not great, but it's there again. If she finds a lot of 5-week support along this area and she gets above the 200 and the 50, then there's more weight to the bull side of things. Okay, I hope that makes sense. The RSI is above the midpoint. MACD here again, because of this, the aggressive nature of the last couple of weeks in particular, a very strong aggressive sell-off by a really strong reversal. MACD's can't cope with that because of the weakness in the lagging side of it. So we still have the fast line below the slow line. Histograms are still below the midpoint. Okay, but they are weakening. So here again, we drew a line on the 50-period moving average. Make a note of that and say, great, if this week price can get above that level, then ultimately the knee-jerk reactional trade would be back up to the highs just recently, which you can clearly see is a long-term support and resistance level in its own right. So if we just go through there, you can clearly see there's a consolidation point, but to get above that, well, then we could see it price stretching its legs even further and we could look towards those highs that we saw back here at the end or the start of December of this year. So if we drop down to the 4-hour, this is where Nikki comes in now. You'll see now, price above the 2 moving averages, RS above the midpoint, MACD fast on above a slowdown, histogram's getting stronger. We need to see that bounce. We've seen the breakout, now we've seen the pullback, now we want to see the continuation.
Okay, yes, I think we were talking about this today in the forum as well. We were contemplating on whether it was a good enough trade to take at that particular time. I know that some of you did take that trade. What we were looking for was that nice breakout candle above the 4-hourly and the 200-day moving average. We got that. It broke through with enough momentum. Momentum was coming through on the MACD, and that looked good. What we were expecting and what did happen was a pullback to that 200-day moving average, a breakout, a pullback, and a continuation. So that's what we're getting at the moment. Now, the principle behind what we've seen so far is the fact that now price is trading into the daily 200-day moving average. So what is the 200-day moving average like? A big, fat piece of concrete. So what we're going to be needing now is for price to be trading higher than that. So any intraday trades and continuations from that must see at least a 4-hourly confirmation close higher. But the fact is we're coming to the end of the trading day now. So what we're going to be doing is looking for a daily confirmation close above the daily 200-day moving average. Okay. If we were looking at this at first thing in the morning, then yes, we could look for a 4-hourly confirmation close above the daily 200-day moving average. But it's 7:30 in the evening. There's only a couple of hours left of the trading session for today. If we can get a daily close higher, then we're definitely going to be looking tomorrow morning in tomorrow morning session for continuations to the upside on this pair. So I think that's pretty much where we leave it at that, looking for that daily confirmation close above, the 50-day moving average, not the 200-day moving average. So we're going to look for that close higher today, and then we're going to look for continuations thereafter. There obviously have been potentially intraday trades on this pair up to that level, but now we're going to be looking for a close above that. So we'll put that down on our list as a tomorrow morning pair to have a look at, see if we do get that break and close, and see if we get that continued momentum to the upside. Do you know what? I know I've already told you I'm in a really good mood after today's trading session, but I have to tell you something else. You guys have all absolutely made my evening as well, because for the first time, every single one of you is online tonight. It's almost like winning the lottery. Not quite, but close, very close indeed. So you just made my evening as well as my day. Let's move on to the next pair. We're going to look at the Australian dollar, US dollar for Neil. I'm still hanging into this pair. I have been for the last 2 days now. Got that break and close, and it did absolutely nothing since then. Trading it slightly more towards the longer term, so I've got quite a big stop on it, and just sitting patiently waiting for something to happen with it. Okay, so Australian dollar, US dollar.
Okay, so this one mimicking very similar, the similarities with the New Zealand US dollar, primarily because it's another commodity cross. Therefore, all the commodity crosses will have a positive correlation against the dollar in this case. So if New Zealand is doing one thing against the dollar, then the Australian dollar should be mimicking something very similar. And here again, we've got a stronger confirmation of the support mechanism. Same year, 2015 low. Price has been spending the last, 1, 2, 3, 4, 5. We're going into our 6th consecutive month now where prices failed to make new lows. You look at the December candle, very bearish engulfing candle. But the question mark you got to ask yourself is, if we had such a huge sell-off in December, okay, a massive sell-off, why the hell did it not close lower than the 2015 low? I mean, what would be the reason? If there was so much negativity that engulfed the whole of November move high, why did we not see any further selling? And that's a concern. But what it did was we saw that initial knee-jerk reactional trade. With a stapling candle, you're almost likely to see a knee-jerk reaction of almost 100% of the initial move. So in this case, 386 odd pips of movement, we got almost close to that on the downside of that. So we had 300, okay? But there again, because of where we're trading in terms of the long-term aspect, we were looking for more of a statement. That's what we're looking for at this current moment in time. because of where we're trading right now, the importance is to look for a statement of intent. Because if we don't get a closed low and we don't get a continuation of the selling sentiment we saw throughout 2018, and we don't get a closing lower than the 2015 low, then we clearly are seeing the bottom of this particular trade, which means that is likely to be a higher retracement. Okay, if you look at the signs at the moment now, the RSI, okay, price, as I mentioned to you, if you watched the chats before the video, now you'll notice that here on the hard right edge, we're testing the same level we were back in 2015. But you'll notice that in 2015, the RSI was below 30. But here, we're well above 40. What are we sitting at there? 37, so close to 40. You can see that there's convergence on price. So there's no genuine sellers at this point, currently. Okay, there's not enough selling momentum. That's what the beauty of the RSI is doing. The relative strength of price right now is weaker than the relative strength was, is stronger, apologies, than the strength was back in 2015 when the weakness was clearly there to be seen. Okay, and that's a concern, because if we are seeing genuine strength within price, it should be on par, if not lower, than the previous attempt. I hope it makes sense. Okay, and that's the beauty of the RSI. Look for convergence and divergence for higher highs and lower lows. In this case, we've seen a huge sell-off over the years from the highs over here back in 2011. You see the massive fall we've seen, and now we're seeing where price is now being supported. But if you look at the bigger picture, you can see we have a bigger move. Now here on the hard right edge, you can see that if you're drawing a line at the low way back here at the start of the millennia, right through to the low in 2009, to the current level that we're in 2015, you see the long-term trend has been breached by price. So here on the hard right edge, this is where the important stuff is, because if we don't see price now bouncing high and reflecting that, yes, this is genuinely a low point, effectively what we're seeing over here is a squeeze pattern before we see a potential continuation to the downside. Okay, because if we do get a close below 2015, then the 2008 low becomes a viable proposition as we head further into 2019. But there again, we need to see a physical close of price below the 2015 low to really solidify that we still have a long-term negative trend in play. Okay, so here again, if you're looking to trade this, it comes with risk, because we're trading at a major support mechanism. Any trades you take to the downside, you have to be aggressive in nature, because we've seen back in 2015, we saw price trading lower than the current level, but it pulled back aggressively to these highs. And we're seeing exactly the same thing taking place right now, because investors and traders alike are well aware that they're trading into a strong support level. Okay, so there again, risk is a major concern on this particular pair. Weekly. Okay, so now on the weekly, you can see clearly the last couple of weeks we've seen a massive pullback, well, not a massive pullback, but a retracement after a hammer formation on the support mechanism. You'll see the RSI, if I get rid of the original RSI, you'll see the RSI over here, for example, same thing. Here, price testing the same level before, but the RSI is very strong. So clear convergence here again. So as we head into this level and you start to see these signs of a hammer, then we're going to see a reversal. And sure enough, we did see one. But as we've gone into the last couple of weeks, we've seen a slowdown in the reversal. Okay. If you look at the two moving averages, still above price. So that's a negative sign. RSI, still below the midpoint, negative sign. MACD is the only thing at the moment now which is kind of playing catch up. Fast line is still above the slow line, below the zero level, and the histograms are just above the midpoint. Okay, so there's a slowdown, a weakness in that momentum.
I think something to point out here as well, if you draw a trend line from the high, you can see the price is still trading nicely below that downward trend. Mm-hmm. Yeah, there we go. Fantastic. So we still got, price has been pulling back towards that level, and we're still trading below that trend. So we're below the two moving averages and the trend, which is something that puts something more into favor for me.
Okay, so now if you look at the last couple of weeks, we haven't seen any new highs. And essentially, if we do have a hammer and we see movement to the upside, then ultimately what we want to see is continued highs, and we're looking at the 50-period moving average as a viable target, which will bring us back towards the high that we saw around that November time last year as a viable target. Okay, let me get rid of this trend line. Come on, you. There we go. So as it stands at the moment now, price is now within a range. She's range bound between the low of the previous 2-week, 3-week low. Okay, so she's range bound over here. So essentially what we're looking for now is a break low, but then indicate that we will be retesting the lows which has come from. Okay, or she stays within here, then likely is she likely to move to the upside. But either side, you can see that the candlestick formation for last week, very short, stubby candle. Half of what we've seen over the last couple of weeks. Okay, so the volume is obviously missing in this particular pair. Okay, if we look at the indicators, as I mentioned to you, both moving averages by price. RSI is still below the midline. MACD is the only one of you showing positiveness, but even then it's very weak positiveness because the two moving averages are quite close together. Down to the daily. Okay, I just make sure that, yep, okay, so you can see the daily, the price now on yesterday's close, bearish engulfing candle after a lot of indecision. Notice the candlesticks themselves over the previous week, a lot of indecision, those candles, because the candlesticks were small and a lot of shadow. So there's still a lot of apprehension on this particular pair. Okay, but we saw a nice bearish engulfing candle yesterday on the close. It took us back below the 50 pair moving average and the 200. RSI below the midpoint. MACD crossover. Fast line below the slow line. Histogram, and you can see the vertical line appeared the day before that. So on Monday's candle, we had the vertical line appear. Okay, but it wasn't a great candle itself. Very small, indecisive candle. But Tuesday's candle close, more of a directional candle. So today in particular, we were looking for that continued sell-off on the intraday time frame. So if we drop down to the 4-hour.
Right. So it hasn't gone our way today, and as I said, I'm still in this pair, hanging on for life. But the good thing about it is that 200-day moving average has been acting as a resistance for the past 2 days. So as long as price remains below that 200-day moving average, we'll have price below the 200 and the 50-day moving average. RSI still remains below the midline. It's only our histogram that's not backing us up at the moment, but let's hope that the piece of concrete that is above price is going to hold it in place. Chris has just pointed out that there is data out on the US dollar this evening.
Australian dollar.
Oh, sorry, Australian dollar this evening, which could have an effect on that. But the fact is, for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 4-hourly bars. So for the last 40 hours, price has remained below that. So I'm not going to close out at a loss. I am in a small loss on this particular pair at the moment. I'm not going to close out in a loss because we could get a nice bearish engulfing candlestick pattern and a continuation to the downside on this pair. So I'm just going to hang out and we'll see what happens.
Yeah, I mean, we've got first, 12:30 tonight, we have the unemployment change figure for the Australian market, and they're expecting a considerable drop from the previous figure. So employment change, we want that to obviously be growing in a strong economy, and they expecting it to drop from 37,000 to 17,500. So that's a drop, a big drop.
And for us that are in short positions, that would be fantastic.
That could very well help guide us to the downside.
Yeah, shame. Right. Okay. So we've got one more request on a pair, and then I've got a requested pair. So the next one again is from Helen, which is the Euro Chief. Euro Chief was on the watch list today. I think from mid-morning I stopped looking at it. It wasn't breaking through the resistance level, but we'll certainly have a look at it now.
Okay, so Euro Chief is, she's had her issues in the past, especially with the Swiss franc. Anything to do with Swiss franc, you've got to, just trade tentatively, because they've been a currency in the past that have actually been very openly aware of manipulating its currency. 1200 was the level that all the way back here in 2011, the Swiss government came in and started to dump its own currency and bought heavily in the euro to try and keep the euro stronger than the Swiss franc for obvious reasons, because as we all know, the Swiss economy is quite small. It relies heavily on imports from the European sector, particularly itself. So to have a very strong currency trying to deal with a very weaker currency, especially when most of your business is coming from Europe, is not a great thing to have. So it was actually out there trying to drive its own currency low to keep it lower in value than the euro, purely for that import and exports, so it actually had a favorable outcome for its GDP. Unfortunately, nobody really wanted to hold the euro because the euro was crap, excuse me French, and hence the reason why, even with a lot of money thrown in it, i.e. the Swiss bank throwing a lot of money at it, the euro did not grow exponentially after that manipulation. It actually went sideways, and then in 2014 when Draghi presented his quantitative easing program because he knew how bad things were in Europe, we saw the Swiss government actually dropping it, and hence the reason why we had this massive shortfall.
Sorry, Chris, can you just move your screen across? Yeah, perfect, thank you.
Yeah. So what we've seen over the years since that introduction of quantitative easing is obviously the euro gaining strength on its own accord. However, as we head into 2018, we started to see that unfolding. Okay, the clear indication of trade wars, Brexit, uncertainties, Italy, another one, big one that started to appear in 2018. Now we have the largest economies in the European Union starting to contract, so much so that they're actually thinking there might be a, inverted commas, recession in Germany, of all places, and that leads to a lot of uncertainty. So we've seen more negativity on this particular pair. However, having said that, price is still being supported on the hard right edge by the 50 moving average, and as I mentioned to you, trend directional moving is a moving average, and you can see that for a long period of time the 50 moving average did a fantastic job of either supporting price all those years, through 2000 right up to 2007 I think it was, and then from 2007 onwards the price has been capped by the 50 moving average. However, 2017 to 2018 price has been above the 50 moving average and has been supported by it just recently. So now we have a viable support mechanism, especially through August right through to the latter part of the year. Price has not been able to make a new low. 1, 2, 3, 4, 5, 6. We're going to our 6th consecutive month where price has physically not been able to drive low. Okay, so there again we have a clear support mechanism in play, a 6-month support mechanism in play. The price is above the 50, but still way below the 200. Okay, so the long-term trend is still one of negative. The RSI was spending most time above in 2017 and most part of 2018. However, towards the latter part of 2018, you can see the RSI has dropped below the midpoint, but flat. But there again, price is flat. MACD, fast line below the slow line, negative sign. Histograms below the midpoint, negative sign. Okay. Ideally, if we're seeing a genuine negative trend, we'd like to see these moving averages below the midpoint. Because if I go back and I show you this long-term sell-off, look at where the moving averages were for the MACD. Predominantly below the 0 level. Okay. So just keep that in mind, guys. Here again, so if we're looking for opportunities on this particular pair, we have to be mindful that price is now trading into a support mechanism. Okay, the August low. So there again, if we don't see price making new lows, i.e. heading down towards the 50 moving average, there's always a very good chance that price could then rebound up again. And if we look at the rebound area, it could be back towards that level over there, because through most of 2017, well, the latter part of 2017, the early start of 2018, the latter part of the mid part of 2018, there's been a consolidation point at that level and towards the end. So we have to draw a line there to say, well, if she does bounce, there's always a likelihood that price could correct back up towards that level. Okay, you can clearly see there's been a consolidation level around there. Okay, it's not in sand, you could sit there fiddling with around, but it's just an area where price is consolidated. So if you're looking to buy this and to hold it up, make sure that you're not holding it if you get to this level, is what I'm saying to you. So down to the weekly time frame. Here again, you can see there are signs of apprehension as we move into this particular point. There's a lot of indecision candles, but then we had a still a spinning top, but bullish engulfing compared to the previous indecision candle on a support mechanism. So there was a weak retracement, and sure enough, last week we saw a higher high. So there we go. We're starting to see movement on this particular pair. But understand, look at the trading psychology. Okay, through the last 1, 2, 3, 4, 5, 6, 7 weeks of trading, there has been movement on this particular pair week in, week out. But it's been very aggressive trades, profit-taking trades, because the candlesticks are very small. There's a lot of shadow. So we know that people have been clearly buying and selling within those weeks, Monday through to Friday. But they've been taking profit too, because it leads to a lot of wicks on the candlesticks. So they're not all that happy leaving capital out there for prolonged periods of time. So you as a great detective in terms of understanding what candlesticks are representing, you should say to yourself, well, it comes with risk, because therefore, if I'm looking to trade this particular pair, I have to mimic exactly what it is that those traders are doing. Their entries are going to be aggressive. Their stop placements are going to be aggressive. Their take profit levels are going to be aggressive. Okay, so there again, you have to approach it the same way that they would do. Draw a line over here. You can see that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks now, price has not been able to get above this level. So that's a concern. And look where price is right now, at that level. So now what we're looking for this week is for price to get above this level and to remain above that level, so that the higher high over here that I mentioned to you, which if you wanted to just squeeze it a bit more out of there, if I can just grab the line and move it, that would be our target, 117. Okay. There again, ideally we want to see moving averages supporting that. Yes, we have the 200 below price, but the 50 is still above it. So there again, really indicating that we're not really in a viable long-term strong trend, because price is trading between the moving averages. That's not trend bias. Okay, that's a range bias system. And sure enough, we are range biased. Okay, we have been for quite some time. A, B, B, A, very slow B move. So yeah, remember that. RSI still below the midpoint. MACD above. So we're getting a lot of mixed signals here too. So there again, it adds to the risk side of things. Remember the risk exposure. Remember, by ticking boxes, we know how much exposure we are presented in terms of the risk side of things. At the moment now, yeah, there is a lot of risk on this particular pair. But understand, if we do get a price break above this level, aggressively take a trade. Don't have to take all of it, just take some of it. But don't leave all of it on the table for long periods of time. Please understand that. Down to the daily. If I just pan this out now, you can see that, yeah, very messy. You can see the volatility within these weeks. It's all over the place. Okay.
Yeah, I think that what we were looking for here was a continuation to the upside to target just short of that daily 200-day moving average. I mean, we can see where Chris has got his resistance level in there. It's a really strong resistance level. And a couple of days back, we saw some positive movement into that resistance. The momentum was there behind the move. RSI is still above 50. Our MACD histogram and Frost trigger lines are still above. So what we were looking for in that case was a push through of that momentum to break that resistance and then look for those continuations. We don't have that, and therefore it's been scratched off the watch list for the time being.
Yeah, and tomorrow, Thursday, we also have the European Central Bank's press conference. Okay, people will be sitting there trying to listen to what Draghi has to say, because remember, Draghi is meant to actually be closing the quantitative easing program they've been running in the European Union for the last 3 or 4 years.
Great.
Okay? Which means that there's no more free cash. He's hoping that all the liquidities he's dumped into the European Union over the last 3 or 4 years is sufficient enough to have created that momentum, that snowball effect, which is driving the momentum. However, we look at the global market, the uncertainty with trade wars, recession potential, he might say, well, hang on, I might just scrapping the quantitative easing program for the foreseeable future, scrap even thinking about raising rates for the foreseeable future, and we might actually have to inject more capital, quantitative easing, at a time of uncertainty, as we'll be seeing in the European Union. Those are the question marks people will be looking to see if he's going to kind of relate to them in tomorrow's press conference or even further as we head into 2019. That leads to uncertainty.
Okie dokie. Well, I'm going to say one more time how happy I am that you are all here. You've really made my evening. If I can only just throw in like a little bit of a moan, because I wouldn't be me if I didn't moan, is that only 4 of you brought a pair to the table today. So hopefully that's going to change tomorrow, but you still made my day by 100% attendance this evening. One more pair that I would like to take a quick look at is the Euro Australian dollar, and we'll close up on that one. So if Chris can pick that one up for me. I'll just do a quick run through on that one, reason why I'm possibly looking at it. Okay, well, here we've got it trading above the 50-day moving average. Our RSI is above 50. Our histogram is just below the midline, but those Frost and trigger lines still remain above. So indicating overall trend sentiment really is to the upside looking here on the monthly. The current monthly candle on itself is trading lower at this stage, but we are still above those moving averages. So if we drop down now onto the weekly, right, this is what I wanted to have a look at here. We saw, 4 weeks ago, that big candle to the upside and ended up closing negative. Price fell back down to that 50-day moving average. We had a spinning top on that level of support, and the current weekly candle is trading higher than that. So we're finding a support level there. RSI is pretty flat at this stage, but our histogram and Fast and trigger lines still remain above. So we're still seeing more indication of trend to the upside here. And the fact that this week's candle is engulfing the body of last week's trading range, we should be looking for continuations in my mind to the upside here. So if we drop down onto the daily quickly, right, this is what we wanted to see yesterday. If you can just make it.
That's it.
Okay.
Yeah, sorry.
Okay. Well, yesterday's candle was a bullish candle. It closed above the 200 and the 50-day moving average. So that was a good sign. We've had a lot of indecisiveness along that 50 and 200-day moving average for a long period of time. We've had that breakout candle. That's what I was hoping for. Our indicators are not backing up that momentum. They're lagging of price, remember. So our RSI is flat. Our histogram is getting smaller. So that negative momentum that's been in the market prior to that is really slowing down, and we could get a potential crossover of these pairs. So in terms of a daily trade, it's not looking that great in terms of getting confirmation of the momentum coming through. As it stands, today's candle not really trading any higher or lower, slightly lower than yesterday's close. But again, it's used that 50 and that 200-day moving average as a support throughout the course of today so far. So if we drop down now onto the 4-hourly time frame, there we've got that 200-day moving average, which is above price. So if you can just zoom in a little bit, thanks very much. So we've got price now ranging between these two levels. And what I'm going to be doing is looking for a breakout above that 200-day moving average during the course of tomorrow. If we can get that continued momentum coming through to the upside, looking at the fact from the weekly, we found a support there on that 50-day moving average. We've had a bounce off that. Today's candle has been using the 200-day moving average and the 50-day moving average as a support. So we've got that support as well below price. So if we can get that breakout above the 200-day moving average tomorrow, then potentially we could be looking for continuations to the upside on this pair. So this is on my watch list. Not a media trade, but certainly one that I'm going to be having a look at tomorrow and looking for continuations and breakouts on. Right, so that is my little quick spiel of that one. Thanks for joining us tonight. Thank you for making my evening. Thank you to the markets for making my day. It seems like I'm making my prayers before I go to bed, but it's been a good day. Great to see everybody online, and tomorrow will be our morning session, be the last of the week. Got a little surprise in store for you at the end of tomorrow. Those that are at work that can't make it, you'll get your recording, but next week is certainly going to be full of fun. So have a good evening, guys, and I will see hopefully majority of you tomorrow morning, 7:30. Take care. Ciao.